Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. Well, what's happening? It's been increasing over the last 50 years since the government has been getting bigger.
Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in Bitcoin and cryptocurrency, technical, on-chain, and fundamental analysis. And today, we've got quite a lot to talk about because this is going to be a very big week for Bitcoin. If you guys have been following this channel for the last year or so, you'll know that we've been talking extensively about two numbers, CPI and the effective federal funds rate. That would be also known as the funds rate. Those two numbers are the major drivers of the U.S. economy right now, and they're being directly impacted by a plethora of geopolitical events, and those two numbers are driving two things. Number one, they're driving the DXY, which is the dollar currency index. That is the basket of currencies that the dollar is measured against to see how strong the dollar is in comparison to other world national currencies. And two, it also has a major implication on Bitcoin. And the main reason it has a major implication on Bitcoin is because Bitcoin is downstream from the dollar. When the dollar is doing well, Bitcoin is largely not. When Bitcoin is not, when the dollar is not doing well, a lot of times Bitcoin will be because there's an inverse correlation there. So this week we're going to be talking about how on January 12th there's going to be a CPI data drop, and we're also going to see some more developments taking place on the price. Right now we're seeing Bitcoin rally above $17,000 up to about $17,250. That's the first time in a while that Bitcoin has been above $17,000. So we're going to look at whether or not that could be the beginning of a new rally. Could this be a breakout this week? Or could we be watching something very much more sinister taking place, you might say. Now, you might be noticing this little thing right over here and wondering what that is. This is a Christmas present that my wife got me, and I'll tell you how everything's going on that front here in a second, but you have to tell me what you think. What do you think? I got a new hat. Does it look good? I'm not going to wear it on stream. I'm leaving it right over here. I just wanted to leave it up there so I could get to it pretty quickly, but tell me what you think. I think it looks pretty good. I'm pretty excited about it. Anyway, let's go ahead and read some chat. Jebb, it sounds like you're talking into a cup. Audio is way off. Thank you. I will see if I can fix that right now. Give me one momento. I know what's going on. Be right back.
Good start to the day here, guys. Put the wrong microphone on. Nice. Let's see if this is giving me the actual correct audio now. Hopefully it would be. I do apologize for that. Huh. Let's see if it's the right audio now. If not, I might have to turn something off and back on again. That's unfortunate. It's not that one. Is it this one? Tell me if it's this one. Apologies, guys. Talking into the wrong microphone. Nice, all better. Boom. We saved it. Sorry about that, guys. Looks like I was running off of the computer's audio. I completely forgot to turn my fancy soundboard on over here. All right, we got Sean O'Brien in chat said, "Hey, Jebb, what's up, Sean?" We've got another person saying, "Hey, we'll call you D's." Hello, D. We got Grand Roofing Incorporated. Grand Roofing Incorporated. And chat, I like singing your name, buddy. It just reminds me of. I never watched this show growing up very much, but it reminds me of Doofenshmirtz Evil Incorporated. We've got Crypto Ben Franklin in chat said, "Good morning, everyone. Happy Monday." Happy Monday, guys. We've also got Richard Harrington, a mellow fellow, Satoshi Yoshi, there you go. Crypto is banging. What's the word, big bird? Sky in the ceiling, how you feeling? Ooh, got it. Mike Lowry in chat. My most trusted crypto channel. Thank you. Love from Bali. Audio input. Yep, sorry about that, guys. Having a bit of echo, a little metal in the sound. That's when people program choosing laptop/wrong mic, said Dr. Fuzzy Eyeball. That's true. You can hear you're in a room with nothing so Yeah, Martine Siebels. Jebb, it sounds like you're talking into a cup. Audio is way off. Well, one of you guys did tell me last week that even if I had to talk to you through a cup with a string on it, you guys would still watch the stream. So maybe I was just testing you guys to see if that was actually an accurate statement. CryptoSec guy said, Jebb, I don't think your mic is working. That's true. It probably wasn't. Sounds like it's fixed now. Dr. Fuzzy Eyeball dropped a member chat, said it's all good now. Martine Siebel said, how Sarah, how the kid? Well, I'm going to tell you more towards the end of the stream, but things haven't really gotten any better. If anything, they've actually gotten worse. So be praying for us in that. Like I said, I will give you a little bit more information and insight on that towards the end of the stream, but at this point, we still could be having a baby pretty much at any point. She will be, 25 weeks and 4 days today, because on Thursday, she'll be 26 weeks, so it'd be 4 days. 5 days? It wouldn't be 5 days. It'd be 4 days, because tomorrow's 5 days. And then the next day, 6 days. And then I think, wouldn't today be 4 days? Anyway, either way, maybe I'm messing up my math. Test worked, you win, lol. I guess so. Really appreciate that. All right, let's not waste any more of your very important and precious time. Let's go ahead and jump onto CoinMarketCap. We've got a lot to talk about today, guys. We've got 3 major topics. First and foremost, we're going to talk about the price of Bitcoin. Then, secondly and second most, we're also going to talk about CPI. And we're very briefly going to dip into DCG, Cameron Winklevoss, and Gemini and Genesis, see what's going on over there. But first, let's start with Bitcoin. Bitcoin is right now, starting off the week, doing pretty well at $17,250, sitting at $16 billion in 24-hour volume and almost exactly a third of $1 trillion in market cap. We're green across the board in crypto right now, up 2% on Bitcoin, up 3.5% on Bitcoin on the weekly. Ethereum up almost 5% just today, and up 7% in the 9% in the last 7 days. Both of these assets being up quite substantially during this year so far, which is only 9 days old, but that is a pretty good look. We've got Binance up 6% and 14% on the week, respectively. XRP up 3.79%. Dono up 12%, having rallied quite substantially not too long ago. Just over the last few hours, up 26% over the last 7 days. I would be cautious about FOMOing into that, because as a fan of Cardano, my first instinct when I see that is, oh man, I want to get some Cardano. Looks like Cardano's doing great. But that may be true, but we're also still at the very bottom of a bear market. So don't necessarily expect for Cardano or another cryptocurrency just to go on an absolute tear just yet. They very well may, but it also could take more time than that. Now, we're going to look at this chart a little bit later. This is US CPI, but first let's start over here on Bitcoin and jump headfirst into some Bitcoin technical analysis, and we will have a good time here today. As you guys can see, Bitcoin has been trading down here in this range for quite some time, sitting down below about $17,300. Now, depending on which level you're looking at, Bitcoin has either broken above resistance or is currently testing resistance. There's powerful resistance sitting here at $17,350, and there's also resistance sitting here at $17,043. Both of those are very important levels. Let's see what's going on here. These are the headlines here. Both of those are very important levels for Bitcoin because they both harken back to some of the levels that we saw Bitcoin trading at in the previous market. We saw quite a lot of ranging in this area right around $17,000 back towards the first half of December. Then we also saw its tops sitting, the top of this market sitting up here around $17,360, which is where we're currently testing right now. We did briefly break out of that, but if you guys will remember, back during this time, I was telling you that Bitcoin was in a rising wedge, that Bitcoin was having a very difficult time breaking to the upside and getting any kind of support coming in from Lux Algo. And very quickly, almost as soon as we started to fall over, we saw a confirmed sell signal, and that ended up crashing the price. So we're not going to go into too much detail on that, but the fact is Bitcoin attempted to rally up above $18,000, attempted to reverse this massive collapse that we saw post FTX. That did not come to pass, and instead Bitcoin has been ranging sideways for the last half of December and moving here into and through all of 2019, as if it were only 2019 still, all the way through 2023 to date. That gives us a very powerful range that Bitcoin is sitting in, and these are just some of the major levels of support and resistance you should look at. We are looking at, I'll just go ahead and change these to be red or green based on whether they're support or resistance. We've got a few powerful levels of resistance up here. Normally I'd use a darker red, but that'll do for right now. And then we also have these blue levels down here that represent our support, and we have even more support sitting down here around 15,800. As you can see right now, Bitcoin's pretty much sitting right there, dead smack center in the middle, and we really have to dig in here to see whether or not we're going to be able to have a big breakout. Because I'll tell you something, right now it could be tempting to look at Bitcoin and say, okay, Look at this. Bitcoin just flipped this resistance at $17,000, broke up onto another a four-figure increase. So it didn't just jump through a $100 level of resistance, but it jumped through a $1,000 level of resistance, jumped from the 16s to the 17s. It may be tempting to say, okay, well, Bitcoin did that. That was 16, 20 hours ago. That was later on yesterday. That was, in fact, breaking bullish out of what was already a rising ascending trading channel. So that could give us hope that the bulls are back in charge. However, there's two, maybe three problems with that. Number one, we barely broke above at all, and we're not just moonshotting because there's a giant short squeeze going on. We're just kind of camping up here, not really doing a whole lot. In fact, we'd be entering into what would be known as a ascending triangle pattern right now. And if we do have a break to the upside, we could look for a price target probably right around $17,800. That level is what we would be looking at, and that's just not enough to get the market off the ground. The second thing is, this is exactly what we saw happen back over here. We saw Bitcoin had an uptrend right here, attempted to break above it, as you can see right here, attempted to break to the upside. It failed. It was not able to get far above that uptrending level of resistance. It was not able to get far above $18,000, and it rejected soundly. And the third thing is that this uptrending rally right now is nowhere near as powerful as this one. It has not lasted as long. So it's not lasted as long, it is not as tall, and is not as wide as it was back in that time. You can see here, it has not lasted anywhere near as long. It's nowhere near as tall, and the volatility therein is nowhere near as large. This is a baby version of this movement to the upside, and so therefore I don't expect that this is going to lead us out of the bearish price action just yet, at least on its own. And so that's where we have to really hone in on what we're looking at here regarding the fundamentals, because there are fundamental reasons why Bitcoin could go through a rally over the next several weeks. However, first of all, those fundamental reasons have not materialized yet. Second of all, we don't actually have any kind of data to assume that the fundamental data that we're going to talk about coming out here in a minute would be strong enough to lead us into a major uptrend on its own. We're going to talk about all of that and more here in just a little bit. If you are enjoying today's video, make sure to hit that like button, subscribe to the channel, make sure to follow us on all of our social media for updates about the content. I'm looking forward to trying to having a video. That was a funny sentence. I'm going to be trying to have a Sunday video style out to this afternoon, by the way. Do apologize that it wasn't out yesterday. Been a very hectic week, as I will tell you a little bit more about later. We got OMAC in chat. Martine Seables. Looks like we got Queen in chat. And Matt C. What's up? Appreciate all of you guys in chat. The hat does go well with the accent, Brian D said. Well, thank you. I appreciate that. I like the hat. I almost felt unworthy of it. I unwrapped it from Three Kings Day, because we celebrate Three Kings Day. And I was like, I don't know if I'm worthy of this hat. But anyway, Bitcoin breaking out on CPI hype. We're going to talk about here in just a second for everybody who tuned in for that story. I just want to make sure that we've laid the groundwork for that, which is our main story through our technical analysis. So let's go ahead and jump on to the chart. Next thing I want to do, now that we've looked at the price action, is I want to look at some technical indicators. The first one I want to look at is Lux Algo Price Action Concepts. This is a phenomenal technical indicator. I love this thing, and I'll tell you why. It gives you so many different pieces of data that are going to be so helpful. I'll just show you what some of them are on the 4-hourly chart, because they're actually about to update, more than likely, if Bitcoin stays up here for the next couple of hours. First thing I want to show you are these three words right here: equilibrium, discount, and premium. You can see this is 94%, this is 6%. Notice that adds up to 100%. It will always add up to 100%, because that's essentially Lux Algo predicting which one of these zones Bitcoin is more likely to go to. It's essentially saying we have a 94% chance of going into the premium zone and a 4% chance of going into the discount zone. Makes sense? We're right up there. That's why I say that we're about to reset. If we punch through this premium zone, then we're going to reset, and the equilibrium will probably be right about there. Then the premium will probably be right up here, and the discount will be right down here, and then that would likely give us a better understanding of the market. This equilibrium level set up here was much more, it is very effectual for this market movement happening back here, back on January the 4th. Now we've gotten mostly all the way up to it, so now we're kind of waiting for an update. But at the moment, you can see that Bitcoin is doing quite well, considering that it was in equilibrium down here around $16,800, and now we move to the upside. that, of course, is standing with everything that we've talked about. The fact that Bitcoin had been ranging down here around 16.8 and is now broken fastly and sharply to the upside. Next thing to talk about is this. This is called a chalk plus right here. This is a CHOCH plus. This is a chalk. This is a big old chalk. What's a chalk? Chalk stands for change, CH, of O, character, CH, plus, as far as I can tell, basically means that it's really big. And what we're looking at right now is the fact that Bitcoin had a high right here, and it managed to break above it. Not only that, though, we also had a break of structure right here because we had a high right here and a high right here, and we managed to break above it. So at the same time, we are seeing a break of structure. I believe you just kind of look in there, you just kind of squint in there a little bit. Then you can see that it is a break of structure, a BOS, and that tells us that the market is moving to the upside and that is breaking its previous resistance. This is just giving us a more algorithmic way of analyzing what the price action is doing, hence the name price action concepts. So, what does all of that mean? Essentially, that means that Bitcoin was in a range, it's breaking out of it confidently, but now we're waiting to see if it can establish a new range. Let me say that again. Bitcoin was in a range, it's broken out of the range, it's waiting to see if it can establish a new range. And the reason that we know that's the case is because we were at equilibrium down here. We did have a certain market structure, but we had a change of character. We did have a certain structure right here, but we broke that structure to the upside. But to the third point, we're waiting to see if we can establish ranging equilibria, equalized market structure up here is because the equilibrium has not reset yet. Once the equilibrium resets up here to 17.3 to 17.5, which is where it would likely reset next, then we can start to see if Bitcoin can maintain these new levels and start doing something that you would see pretty often in markets where you just kind of ladder and stair step up. That's oftentimes how you're going to go into a rally when you don't have one giant, massive, bullish story. Cough, cough. Could that be CPI coming out? We'll see. But basically, we're now just waiting to see if that third step will take place. Ranging starting up here. Again, remember, we were ranging. We went through the breakout, which was right here. Now we're waiting to see if we can establish a new range up around 17.3 to 17.5. That's what we're going to be waiting on. That's what price action concepts is telling you in short. We're also going to look at the other part of Lux Algo, being Lux Algo Premium. This is a completely different way of looking at the market. This is much more algorithmic. Price action concepts is basically bringing to light many of the different pieces of data that are built straight into the candlesticks. However, Lux Algo itself, Lux Algo Premium, the original indicator, is an algorithmic view of the market. And something is going on Lux Algo right now that is quite encouraging on the Lux Algo Premium front. Bitcoin had been under a confirmed sell signal for quite some time here, ever since the 15th of December 2022, excuse me. Years are flying by. We've been moving down and to the sideways direction for quite some time. More like go east, my young man. We've seen the market moving sideways for quite some time. This buy signal was not confirmed because Trendcatcher did not turn green, meaning that this strong sell signal was just a repeat of this one. This buy signal, in contrast to this sell signal, was not actually confirmed because we did not turn green on Trendcatcher, making it invalid, which meant that the next sell signal was just a repeat of the previous sell signal. You see how this keeps going until we have something change in the actual the trend catcher. So then we saw a buy signal here, but this one actually has been confirmed. This trend catcher was confirmed at 1500 hours Eastern Standard Time yesterday on Sunday. That happened because Bitcoin had a major movement to the upside. Bitcoin, you can't see it because of the candlestick coloring, but you can see we had a green candlestick, then a red candlestick, then an engulfing green candlestick. These three candlesticks are very bullish. This is like a rocket taking off right here. This is extremely, extremely bullish. Tried to rally, bears tried to resist it, and the bulls said, nope, we're going to go through a big rally. In doing so, we did turn Trendcatcher green. Trendcatcher did start moving to the upside when it has been perfectly sideways for nearly a month, at least 3 weeks. The fact that this moved to the upside gives us a lot more confidence because now we actually have a bullish signal that we can go off of on Bitcoin. Now, this is down here on the 4-hourly chart, but even looking at some of the other charts, well, first of all, on the 6-hour chart, we never actually stopped being under a green trend catcher, so that's actually pretty bullish, and we do have a buy signal right down here that's giving us some confirmation. Up here on the 8-hour, for example, I don't think this is green yet, but it very well could be because you can see that if we do manage to get up here and stay up here for a time, then the trend catcher is sitting right here at the exact level of resistance we're at. Of course, it's not going to turn green while we're below it. Why would it? If anything, it would just ladder down to meet us. But if Bitcoin's able to get up above 17.3, move up to 18,000 or beyond, based on that equilibrium coming into play, and then if we rallied up to the premium like we talked about a little while ago, then we could turn trend catcher green on the 8-hour chart, which could be an early warning sign that we're going to go through a major rally. Of course, that is a big, big if, because Bitcoin would first need to actually go through that rally to get that confirmation on the 8-hour chart. But at least we can take a look at the 4-hour chart to try and get some idea of where Bitcoin is and where Bitcoin is going. And also, of course, down on the 1-hour chart, it's a lot more flexible. You're going to see a green trend catcher down here. We've been under one for quite some time. 1 hour is a little too snappy. 8 hours isn't snappy enough. I like 4 hours to really kind of ascertain intraday price action. And I'm quite happy with this. One thing to keep in mind on Lux Algo is it is giving you this X up here. This is basically a sell signal. This is like a little mini, not a sell signal. This is a take profit is what it's called. This is a take profit for this buy signal. This essentially tells us that if we are going into a rally, this is probably the end of the first leg. That makes sense because if you'll remember, we were talking about Bitcoin moving into a symmetrical, into an ascending triangle pattern right here. So just understand that the first leg of this movement to the upside might be over, but Lux Algo, both of its indicators are indicating to us that this ascending triangle pattern is going to be very important, and if that does manage to break us to the upside, that's going to be a big deal. So let's recap, because I know that was a lot, and I just threw a lot of technical information at you. If you did enjoy Lux Algo and you think it's a wonderful indicator like I do, then make sure to sign up for it. You can find the link in the description box down below. Use coupon code Jebb, J-E-B-B, for 20% off at checkout. You will be very glad you did. We know hundreds of people, in fact, probably thousands of people at this point that have signed up for Lux Algo, and they are loving it. We're always getting good feedback. So let's back up, review. Bitcoin's been ranging sideways for around $16,800 for the better part of a month. We had pretty much no technical hope of Bitcoin managing to go through a major rally to break out of that range until about 2 days ago. Around that time, over the weekend, Bitcoin decided that it was going to break to the upside, and it was going to rally up to about 17,250. Right now, it is broken out of its equilibrium. It's looking to reestablish a new equilibrium up in the mid-17,000s, and if it does that, then that could set the stage for another rally to the upside, because then we would already have one step up. The step up from around 16.8 to about 17.4. That could be the first step towards a stairway back up towards the $20,000 range. However, there's not a lot of strength right there. The bulls are not very strong. This is not a big movement. This is actually a very small movement, especially when compared to previous market movements similar to it. That basically tells us that if Bitcoin has any hope of making best on this rallying opportunity that it has, then essentially Bitcoin's going to need a boost from something. What could that be? Well, that's what we're going to talk about in the second part of today's show. Of course, we titled this stream, Bitcoin Breaking Out on CPI Hype. That's really the exciting news, but it's actually more of a question. Are we going to see some CPI data hype? And if we do, are we going to be able to see a major breakthrough with it? That's what we're going to be talking about here in just a second. However, let's go ahead and read some chat. Really appreciate all of you guys tuning in. We got 550 people in chat today. That's a huge number. Thank you guys so very much, especially with how slow the market is right now. I really appreciate all of you tuning in. All right, there's plenty of technical data in the long-term charts saying BTC going up. Absolutely, I agree. I do think that Bitcoin has either bottomed out or is very close in time, maybe not price, to bottoming out. It's very possible that if DCG blows up, which it could, well, I'm going to make a video about that, the Bitcoin could drop down to 10, 11, 12. However, that doesn't seem to be the most likely right now. All right, and by the way, I am reading chat right now, so if anybody's got anything they want to say, now would be the time. Crypto JMP is here. Shout out to you, my friend. Really appreciate that. All right. No more Alibaba mic. Yay. Yeah, by the way, guys, I will have to show you. I got my camera bag set up with Canon EOS R and another Shure SM7B. We've got several of these microphones and everything. So now whenever I'm traveling or at home, I can run the stream with the professional studio grade equipment that we use here at the home office. I can throw it all on my back and take it anywhere in the world with an internet connection and somewhere to charge a laptop. So that's pretty cool. Getting the rest of that set up today. As I told you guys, I am switching over to a MacBook Pro 14-inch, so got to do that also. Jebb, what are your thoughts on DOT? DOT is a very interesting project. I think it is a good project. The tricky thing with DOT is that DOT is attempting to become the layer zero interoperability blockchain between a multitude of different application blockchains, such as Ethereum, Cardano, Avalanche, Binance Smart Chain, Solana, etc. The tricky thing is people aren't really using all of those chains right now. They're really only using Ethereum and a little bit on Solana and Cardano and on Binance Smart Chain, truth be told. But like I told you guys, basically last bull market, we built a 30-lane highway because we had 30 lanes worth of traffic coming through all of our decentralized applications. And now we really only need a 6-lane highway. So many of the application blockchains that were being utilized before, because there wasn't enough room or the gas fees were really high on another blockchain, that kind of stopped. That disappeared. The incentive to use 10, 15 different blockchains kind of vanished because there's so much less traffic at this point that there's less consumer activity, if you will, to use an economic term, to demand more variety in the types of blockchains we use. So everything's more or less centralized itself back to Bitcoin, back to Ethereum and Binance, Solana and Cardano, probably in that order. I'd have to check into some numbers, but I would imagine it's in that order. So as far as what are my thoughts on DOT, I think it's a great project, but I think it's a project that does better during a bull market rather than during a bear market. But as far as I can tell, the team over at DOT is still continuing to grow. Excuse me, XRP is being used as well, lots of it. That's true. XRP is being used a good bit. Thoughts on Nervos, CKB? Don't really have any. Haven't looked at too many of them. Too many of the really low cap altcoins right now. Obviously, you guys know there's a lot going on in our personal life that we're working on, and also there's a lot going on in the business life that we're working on. We got a lot of stuff going on behind the scenes here. Got some pretty big announcements for you. Hopefully this week, if everything goes well. I actually started watching today before the stream is over. What's up, DW Free? Shout out to you. All right. Will there be new videos on CT2A? Shout out to you, my friend. CT2A is now an antiquated product. However, Club DeFi is not, and you guys will be getting more announcements on that and updates on that relatively soon. We're hoping by the end of this week, although no promises on that because we are still trying to iron some stuff out. Have you heard about this Amazon coin that people keep asking about in your comments, or is it some scam? Amazon, to my knowledge anyway, has not released any cryptocurrency, which means if you're seeing anything about an Amazon coin, it's almost certainly a scam. If it looks like a scam, if it smells like a scam, if it runs like a scam, if it tastes like a scam, if it smells like a scam, it's probably a scam. There's a lot of scams in the crypto industry. Buy 5K worth of XRP or XLM. I would rather just keep the 5K, to be honest with you. If I had to do either one of those, it would be XRP because Lumens is the I would go with XRP. I think XRP is a more valid project than Lumens is, personally. All right, let's keep moving here. We're going to start off by explaining exactly what CPI is to the best of my ability. CPI stands for the Consumer Price Index. It is updated once a month by the BLS, that's the Bureau of Labor Statistics, which is a United States federal government entity, which basically tracks the strength of the economy through a multitude of different numbers. These are very complex calculations that go into these numbers, and these numbers are some of the biggest drivers, not only of economic growth, there are some of the biggest metrics that track economic growth. They're also some of the biggest numbers that the Federal Reserve uses to make its decisions. One of those numbers is the U.S. CPI, that being what's known as headline CPI rather than core CPI. Those are two different things. Core CPI is CPI minus food and energy. So essentially what CPI tracks is it tracks the overall value or cost, if you will, in a point basis. It's sitting around 297.71 right now. In a point basis, the how expensive things are in the economy. So, for example, yesterday we were grocery shopping and we were at Hitchcock's, and there's all of these different groceries, and a little 12-ounce pack of ham is $6.59, and we went to a Walgreens or to a Dollar General, and a composition book, like one of the little ones with rings, not the actual composition book, but one with the rings, was $3. I remember that when that was $1.25. You've got cars going up in price. You've got meat going up in price. It's $4, $5, $6 a pound when it used to be $2 or $3. You've got gallons of milk sitting in $6, $7 a gallon when they used to be $3 or $4. These are big changes, and all of those are things that are measured in the U.S. CPI. So this number essentially tells us what the U.S. economy is doing in regards to how expensive goods are. Now, oftentimes this is misconstrued to mean that this is a metric of how fast the US dollar is losing value. And in a way, that is the case because ultimately the value of the US dollar is its ability to purchase things. So if things are getting more expensive, then in a way, the US dollar is getting less valuable, but that's not exactly what it's tracking. It's actually tracking the increase in the value, or the cost, not the value stays the same. It's tracking the increase in the cost basis of a basket of different currencies. In a basket of different consumer goods, many of those being very close to home, such as, like I said, food, energy, electricity, rent, all of these different cost of living, essentially. So CPI jumped all the way up to 9.6 about several months ago. That's percentage points year over year. So that means it was 9.6% higher than it had been just 12 months before that time. That drives the Fed because the Fed is raising interest rates very aggressively. The federal funds rate is sitting at 4.25 to 4.5 right now. That number basically means that every bank that is going to give you a loan is using that number as their basis. So if you're trying to buy a house, you're never going to see a 3% loan right now because the banks would be upside down. They are setting all of their interest rates with the floor at whatever the Fed funds rate is. So the Fed funds rate right now is 4.25 to 4.5. It's a range. It's not an exact number. But that number essentially is the basis for all other consumer debt. So we're talking credit card debt, we're talking automobile loans, we're talking about student loans, we're talking about home loans. Those are the four biggest categories of loans, other than maybe you might say business loans, which is a big one in corporate America. All of those loans are based on that federal funds rate, and that federal funds rate drives two things. Number one, it drives the growth or stagnation of the U.S. economy. Number two, it drives the strength of the U.S. dollar, which is measured on something called the DXY, the dollar currency index. I'll show you that chart here in a second. CPI is critical because CPI, and track with me here, CPI affects how the Fed FUDs the market by changing the rate. The rate affects the U.S. dollar, and the U.S. dollar affects Bitcoin. So there's a knock-on effect. CPI is affecting Bitcoin in about two steps. So the CPI is affecting the Fed. The Fed is controlling the strength of the dollar by the federal funds rate, more or less. And then the DXY is also changing is affecting Bitcoin. So the question is, how long is it going to take for CPI to come down so that the Fed can bring down interest rates, or at least plateau them and stop them from increasing, so that the DXY stops getting so strong so that there's then room for Bitcoin to come in against the dollar? Because Bitcoin is very much inversely correlated to the dollar. That's a very complex web of numbers and how they all impact each other. And I haven't even once mentioned the entire geopolitical space over here that's also impacting the Fed's decision, that's also impacting the CPI, which is also impacting the DXY and the dollar strength, which is also impacting the geopolitical situation. So it's a loop, and how all of that ties into Bitcoin. But I can tell you this, the two biggest, most important numbers in Bitcoin today are maybe three, I'll say, and all three of them are connected. It's the CPI, it's the federal funds rate, and it's the dollar currency index. All three of them are set up in a way that is not very conducive towards the growth of Bitcoin. The fourth, and I would say it's the fourth, would be the US GDP, but the US GDP has actually managed to grow over the last quarter. Don't really see how that took place, how that happened, but that's what's reported. BLS has some interesting data. Anyway, 12-month percentage change consumer price index seasonally adjusted November 2020 to not seasonally adjusted. That's the long form of what we're looking at here. Source, U.S. Bureau of Labor Statistics. This is bls.gov/CPI/. This is the most recent data. This data is going to be updated on the 12th, which is this Thursday. You can even see that right here. December 2022 CPI data are scheduled to be released on January 12th, 2023 at 8:30 a.m. Eastern Time. That's 1.5 hours before this show goes live. As you can see right now, all items is sitting at 7.1%. Food is sitting at 10.6%. Again, that's year-over-year change. We're going to talk about what that looks like here in a little while, and why that probably is going to come down aggressively over the next 3 months. We've got energy sitting up here at 13.1%. That was at 40% not long ago. So this is a movement in the right direction. We've also got all items less food and energy. This is what's known as core CPI. This is what's known as headline CPI. So let's back up here for a second. Why is CPI so high right now? Why is inflation so high? Because if you don't have the context for that, then you're not going to understand, first of all, why CPI is important, and second of all, why it's a problem. The reason that the CPI is so high right now, and again, that basically is tracking the devaluation of the US dollar, but that's the secondary thing that it's actually tracking, because it's actually tracking the price and cost basis of goods in the United States, which essentially means the value of the US dollar, because the dollar is used to purchase those goods. I think you understand. The reason the CPI is so high right now is twofold. Number one, we had a pandemic. During that pandemic, we printed $10-15 trillion. We don't know the exact number because who does accounting at the federal government? That much money was printed and poured into the economy to boost liquidity so that the economy would not completely and totally collapse. And to a certain degree, if we're going to operate under a debt-based model where we have central planning of economies and we manipulate our currency to stave off recession so that we can hopefully kick the can down the road another generation, then fine. I guess I get the idea of printing some money. But we printed $15 trillion. When you do that, you hugely undermine the value of the US dollar. You did undermine the value of the US dollar when the government did that. And that is directly leading to the increase in the cost of these different goods. So the devaluation of the dollar does lead to the increase in cost of these goods. The increase in cost of these goods tracked by the CPI does not necessarily reflect the value of the dollar. We can't exactly get that number without doing some extrapolation based on supply and demand and how much of the US dollar is out there and how much of it is being used day to day. So we printed a ton of money, causing a huge devaluation in the dollar. For example, let's say you have a diamond ring. Pretty valuable to you, right? Let's say you got married in this diamond ring. Very, very valuable to you. Now let's say I give you 100 of them. Are you going to value each one of them as much as you value the individual ring? No, of course not. But in the economy, if you change that by 10%, you say, here's 1.1 diamond rings, then all of a sudden the diamond ring's a little bit less valuable. Following the metaphor, I understand it doesn't work perfectly. The point is that you end up not caring as much about your currency because it doesn't go as far because there's more of it out there. Every civilization that has ever collapsed has normally had a currency crisis behind that collapse. There can be social, economic, political, regional, geopolitical factors as well, conflict matters as well. But normally there was a currency crisis. That currency crisis was normally put in place by the central government of that society so that they could fund their repairs of the country so that they didn't actually go through the crisis. And then because they manipulated the currency, that actually ended up being their downfall. Look no farther than Rome. If Rome hadn't have started clipping its coins, it would have maintained a very strong currency. It could have reestablished its economic model so that it wasn't just conquering everything and looting everything to fund its empire, but it could have turned more inwards towards manufacturing and trade with some of those trading partners that they were at war with, and Rome could have lasted a lot longer had it not absolutely collapsed in on itself after it devalued its own currency. Of course, that's massively oversimplified. There are many reasons why Rome collapsed, but a currency crisis was absolutely one of them. The point is, when you manipulate the currency, it, one, causes the CPI to go up. Two, it causes the dollar value to go down. And three, it does have an impact on how the Fed is going to do monetary policy because the Fed has been wanting to raise interest rates to combat that inflation. So that's the first thing that has impacted CPI. The second thing that's impacted CPI, moving over here a little bit, is geopolitics. The first thing that caused CPI to go up so much was the fact that we printed a ton of money. A ton of quantitative easing. I don't have the number in front of me, but it was in the trillions, multi-trillions. 14 figures, or what would it be? 16 figures. We're talking to over $10 trillion was printed, created out of thin air. So that's one of the biggest drivers of the devaluation of the currency. So we're still fighting that. We're still trying to find, as we were talking about in Bitcoin's price earlier, equilibrium. We're still trying to figure out how the market can equalize around a new value of the dollar. The dollar is probably worth at least 20 to 30% less than it was just 5 years ago, probably even less than that. So we're trying to figure out how to run the economy with a dollar that's worth a third less than it was. We've started to get there because we stopped printing money. The problem is we started to get there about 9-10 months ago. February 24th, 2022, Russia invaded Ukraine and caused the biggest geopolitical quagmire since the end of the Second World War. So not only were we recovering from a cultural crisis where the entire economy of the entire planet was shut down, completely blew up the culture. I mean, you tell me, does today feel the same as it did 5 years ago? Not really. It feels like a very different world. It just feels that way. You can tell in your spirit. It's more gloomy. It's really sad ever since the pandemic. It doesn't have to be that way, but it is that way. So you blew up the world as far as culturally, societally, but then you also were dealing with one of the biggest currency crises since 2008, at least, we printed massively more money than we did in 2008, by the way. We're like an order of magnitude more money. We printed $1 trillion, $2 trillion in 2008. We printed between $10 and $15 trillion this time, to put that into perspective. So we were still dealing with that. Then Russia, who was being backed into a corner by many of the different economic forces that were impacting them in the post-pandemic world. They'd already been planning this, but then they realized, wait a minute, we got to make a move now or we're never going to be able to. So they made a move on Ukraine to try and shore up their borders because they don't like NATO being right next door to them in Latvia, Lithuania, and the Baltics. They made a move on Ukraine. That has not been going very well for them. That's also not been going very well for the global economy when Russia and Ukraine are some of the largest wheat exporters. Ukraine's one of the largest sunflower oil exporters. Phosphate is one of the biggest exports that they have, which powers the entire global fertilizer supply chain. They are also one of the biggest, Ukraine's also one of the biggest exporters of pig iron, which the United States was importing so that we could run our steel industry, our last step steel refining industry. We can't really do that from Ukraine anymore. Both of them were huge exporters of a lot of stuff that drove the economy, especially foodstuffs, which is actually the technical term. Neither of them are really able to do a whole lot of that anymore, which has led to major food problems the world over. None of that is helping, one, the energy situation or the food situation. Let's just back up. Let me just make sure you understand why these two numbers are so high, food and energy. These two numbers in CPI were already high before the Russian-Ukrainian conflict began. They got a lot worse when it did begin because Russia is the number one and number two exporter for natural gas and oil on planet Earth. You might say, but they don't export a lot to the United States. You're right. They export mostly. Russia exports mostly to Europe. Europe has placed sanctions on Russia, so now they got to find oil elsewhere, and they're buying it from the United States, Venezuela, and a lot of the other United States suppliers, which has caused the price of oil and gas to increase substantially in the United States, leading to an increase in the cost basis for petrochemicals in the U.S. In the same way, there's been a knock-on effect. Ukraine and Russia are some of the biggest exporters of food in the world. Luckily, the United States has a lot of food stability and food independence. However, the United States does buy food from other places, and food is not just impacted by supply and demand of its own industry, but supply and demand of the oil and gas industry, because you got to run those combines somehow. You got to put something in them, and good luck trying to run all the combines on ethanol. You need gasoline for that, or diesel, actually. So when Russia and Ukraine are two of the largest food exporters in the world, and they all of a sudden shut down most of their industry due to sanctions or complete and total destruction or blockade, then the rest of the world has to buy food from somewhere else. So they're buying more food from the United States, meaning that there's less to go around in the U.S. Combine that, by the way, with the fact that the Colorado River has lost a ton of its supply, that you've had farmers have to shut down all over the Southwest. That's something you don't hear about very much, but that is definitely not helping the food situation. You run into an area where there is a massive hole. There's a massive void in the global accounts for food and oil and natural gas. And those three things are some of the biggest drivers of inflation in the entire economy right now. Not to mention, oil and gas drive an entire petrochemical industry, which makes up $20-30 trillion of the global economy, which impacts every single sector. You look anywhere in the room you're sitting in right now, you're going to find something made out of oil and gas if you go back to the very root, because it's a petrochemical. The chassis of this microphone is made out of steel. This cord right here has a plastic sheath around it. That's a petrochemical right here. This is plastic, petrochemical. This is steel. That was probably, there's about a 1 in 3 chance that the steel in this boom arm was sourced from somewhere in Ukraine. Same thing with all of these different raw resources. It has caused the price of goods to skyrocket while the dollar's gotten less valuable. Pause. I know I just threw a lot at you, but if you didn't catch all of that, I get it. Let me just break it down very simply. The cost of everything has gone up because everything's got harder to source. That affects CPI on the supply side of things. The dollar has lost much of its value due to all of the printing. That affects things on the demand side. That causes in both directions, both the cost of goods and the currency which they're denominated in, to lose their basis and get weaker on both fronts. That caused a perfect storm in CPI. That's one of the reasons I don't buy that we only went up to 9.5. I don't buy it at all. I don't buy it at all. I would bet the U.S. dollar's lost between 20 and 40% of its value in just the last 3 years. However, the news coming out on 12 January 2023 could be good. Right now, we're looking at 7.1% on all items for CPI. This was 7.2 8%, I believe it was. We dropped down, might have been 7.7. I think it was 7.7. So we dropped 0.6%. Right now, we're looking to see whether or not this is going to drop farther, and there is a good likelihood that it will. A couple of reasons for that. Number one, the United States has become much more isolationist, protectionist, and has started to give up on globalization and start focusing in on itself, meaning that we are holding on to a lot more of our food and our oil and our natural gas than we had before, meaning we're not selling as much of it, meaning that there's more liquidity to lubricate the food and the energy sectors in the United States, meaning that these prices are likely going to not come down. You'll almost never see those prices come down, but at least stabilize, meaning that CPI is going to take a bit of a chill pill in the United States, probably not so much in the rest of the world. Make no mistake, if you're in the United States, you are the most insulated individual in the world as far as your national nation of where you live. Of anyone. Every single other nation on planet Earth is going to go through more inflation than the U.S. as far as the prices of goods and services, every single one of them. If you're in the United States, you're the most shielded from this of anybody because we have world reserve currency stats and we're the largest economy on planet Earth, and we can be as independent as we can be. We will never be able to do everything that globalization could do on our own while it's unraveling, but we're going to have the most insulation from that destruction as possible. So what I'm expecting here is that we're probably going to see, we're more than likely going to see CPI drop not by 0.6%, but probably by 0.4 to 0.5%. The reason I tell you that is this. Let me see if I can find it here. I don't know if I have the number up. Let's see. I don't. I had a chart. Here we go. Here's the chart I wanted to show you. This is the actual United States Consumer Price Index. I also have it over here on TradingView, but it was a little bit easier to see on this website. This is tradingeconomics.com/United-States/consumer-price-index-CPI spelled out. This shows you the actual number, the consumer price inflation rate. CPI is not actually intrinsically a percentage. That percentage obviously has to be derived from some number. You can see the number has been sitting sideways here between 296.3 and 297.71 for the last 6-7 months. This is what I've been talking about and why the CPI has been dropping so much recently. I've been saying this for the last 6 months, that as CPI comes in, we're likely not going to see another giant jump because these numbers are ranging sideways and we're dropping off all of this tailing data. Similarly to how Bitcoin is attempting to reestablish a new equilibrium up here around $17,300. Essentially, CPI is establishing a new equilibrium right up here around 297 to 300. Essentially, we had an equilibrium right around, in here, and Bitcoin just, the US dollar just skipped forward like 3 years. Because if you just draw this trend line, very simply, and this is the last 20 years of data, you can see if you follow this range, we probably would have been right where we are here in about 2026, 2027 anyway. Basically, what all that printing did to the U.S. economy is it just skipped our prices forward about 4 or 5 years. That's not good because the economy needs time to adjust to that. And the economy has not had that time to adjust to that. Nevertheless, like I said, the point is Bitcoin, the U.S. dollar, rather, the CPI has jumped dramatically very quickly. But now it seems like it wants to start ranging again, except instead of ranging at its previous trend, it wants to kind of start ranging right here again. CPI is always going to be going up. There's always going to be some inflation. That's literally their goal. They literally want there to be 2% inflation year over year, every single year. That is their defined goal of 2 to 3%. You can see right here, just picking a random range from August of 2010 to August of 2011, in 365 days, it rallied 3%. That's what they wanted to see. CPI over this 1 year period, for example, however, rallied 10%. So that's where all of that inflation came from. In the span of just 577 days, about a year and a half, CPI jumped 14%, where in that time it normally would have jumped 4%. That's what I'm talking about. CPI is not going to go perfectly sideways, even as sideways as it has been over the last 6 months since June of last year. But what we are seeing is this trailing data is dropping off. What we're going to see is likely another 297, maybe a 298 sitting up here. Then we're going to see this 278 drop off. So you're seeing a 1-point jump to the upside. Then you're seeing this 3-point jump drop, and then you're seeing even more of the sideways movement. You just run the numbers on that, and what you're going to likely see is major categories dropping from 7.1 down to probably 6.7. I would probably say 6.6 to 6.7. That'd be a 0.4 to a 0.5% drop. That's what I would expect. And when that occurs, that's going to have a big impact on two things. It's going to have a big impact on the Fed's policy, which people are already predicting that they're going to jump the rate by 0.25%. That would be interesting to me if they only jumped it by 0.25%, but a lot of people are predicting that. So far be it from me to say that they're wrong. We'll see what happens February 1st. There is still a likelihood they could jump it another 50 basis points, although I'd be very surprised if they plateaued rates at 4.75, considering how much the U.S. dollar is playing into geopolitical strategy against Russia. Because if you don't realize, Russia put themselves way out there, and they just put themselves 15 years in a hole because that's how long it would take them to rebuild the military that they lost in 9 months. The United States has the potential right now, just by sending Bradleys and different kind of weapon systems and Patriot missile batteries to Ukraine and to give them kill chain support in all of those weapon systems and pretty much everything but boots on the ground, to empower Ukraine to just decimate Russia economically and put Russia so far behind that it's like we're going to party like it's 1993 or something. And so they want the dollar to be very strong, even if it causes economic damage in the next 1 year to 2 years, because that strong dollar and that strong economy, if you will, can be utilized to help to fight that economic battle against Russia. Different story. Point is, if CPI does drop by 0.6%, then you start to have more of an argument that they could come in at 4.75. The tricky thing is, historically, whenever you see CPI go way up, then the Fed starts raising rates to meet that, but they normally don't stop raising rates until they actually meet CPI. So if it drops down to 6.6, and they raise it to 4.75, then there's still a 1.75 percentage point gap there, which means that it would take 3 or 4 months for the gap to close just by CPI coming down. So if they do another 0.25 interest rate hike, they may end up doing another one and going up to 5 to 5.25. I still think there's a high likelihood that they could go even higher, up to 7 or 8%, but we'll see. CMEgroup.com doesn't seem to think that's what's going to happen. This is a very credible data source and a very credible set of predictions. So we'll see what takes place. Anyway, that was long-winded, but because I wanted to get technical and I wanted you guys to have the information. Again, let me break it down very quickly. There was a currency crisis, and that's exactly what it is. It was a planned, intentional currency crisis. Now, it was not intended to be a crisis, but what took place with the currency was intended. There was a planned devaluation of the U.S. dollar to increase liquidity in the economy short-term so everything didn't fall apart. We were still picking up the pieces of that when globalization ended, when Russia attacked Ukraine on February 24th, 2022. That very day was the last day of what we grew up knowing as globalization that has been in place for the last, ever since the Second World War. It's really been in full swing ever since the Iron Curtain fell and you had 25 more nations join globalization and the entire Soviet Union collapsed, and all of that capital, all of those resources, all of that manpower just dumped onto the global economy, and you just saw a juggernaut world economy for the last 30 years. That ended the moment Russia moved across that border and moved on Kiev. So that has caused a huge issue, again, on the actual logistics of running a modern industrialized globe. Those two, a currency crisis and the end of globalization at the same time, caused a huge amount of inflation. That huge amount of inflation has led to a large increase in the Fed rate. The large increase in the Fed rate, and this is where we'll kind of tie it all into a bow, has led to a very strong Dixie. Now, keep in mind, the Dixie has actually started to come down relatively recently. Led to a very strong Dixie as the dollar was rallying against a basket of other world currencies. Dixie started to come down, but it's still very high. And that has had an impact on Bitcoin. Because if you look at Bitcoin, this will be our final point here. If you look at Bitcoin and you compare it to the Dixie, let's see if I can do it upside down. I think there's a way that I can do it upside down. Not there. There's a way that I can do the Dixie upside down. I don't remember how, though. Maybe some of you guys can help me. Where is it here? Dixie inverse. There's a way that you can do it. I forget. Nevertheless, if you compare the Dixie to the US dollar, the Dixie to Bitcoin, then you're going to see that whenever, I have forgotten how to do it. I know there's a way to do it if you guys could remind me. Then whenever the Dixie is very high, as you can see right here, let's just go on to this chart of Bitcoin, or this chart. There we go. Whenever the Dixie is very high, Bitcoin is normally very low. Whenever the Dixie is very low, normally Bitcoin is very high. If I were to inverse these, you'd see what I'm talking about. It is encouraging for Bitcoin anyway that the Dixie is going down sharply, because that does give Bitcoin more of a room to go into a rally, and that is very encouraging. However, the Dixie is still remarkably high, much higher than it's been in a very long time. In fact, you can see it's still higher than it's been in many years. And if we go over to the Dixie itself, you'll see that the Dixie is the highest that it's been since November of 2002, actually moving into January of 03. So nevertheless, that's kind of the way that all breaks down. Hopefully that wasn't too much on you. As far as the question, Bitcoin breaking out on CPI hype, very simply, if CPI drops 0.5 to 0.6%, that will likely lead to a major increase in bullish sentiment on Bitcoin. Whether or not that will lead to a major rally on Bitcoin that leads into a bull market is yet to be determined. However, the fact that CPI is coming down, that Dixie is coming down, and the Fed seems to be slowing down and tapering their interest rate hikes is a much more bullish environment for Bitcoin than Bitcoin had otherwise been exposed to in a very long time. I talked to you guys about this in October. I told you that moving into quarter one, especially quarter two of next year, which is this year, 2023, if you see CPI coming down, Dixie is getting weaker, GDP is still looking solid for the US dollar, for the United States, and the Fed stops and plateaus rate hikes, and we have everything kind of calmed down geopolitically, which is far from happening right now, well, then Bitcoin could potentially have found its bottom. Now, there are a couple of wrenches to throw into that we'll talk about. First and foremost, DCG. DCG owes Genesis $1.675 billion. Genesis owes Gemini $675 million. I think it's $900 million, excuse me. If that whole empire collapses, then you're seeing another black swan down to 12,000, almost certainly. If DCG implodes on itself, you see a black swan to at least 12,000. We shall see what happens there. Could Bitcoin break bullish on CPI hype? Absolutely it could, and I think you will see a break to the upside on it. Alt-I will invert the chart. Thank you. I forgot the key binding. Stock Squeezer 69 said, backed going to make a huge run with Bitcoin. I wouldn't be surprised. All right, let's read a little bit of chat, and then I will catch you guys up to speed on what's going on personally. I know a lot of you guys have been praying for us and concerned about what's going on. I really, really appreciate all of the love and support. Really do. It means a whole lot to us. So, yeah, as I said, I'm reading chat right now, so if there's anything you want to say or throw in chat, then let me know. Fortune favors the brave. Somebody's been watching the Crypto.com ad. Let's see. Thoughts on Nervos? Answered that earlier. Yep. The new narrative is whatever the WEF approves. The World Economic Forum definitely has a lot to say on it. Let's see. Devaluation of the U.S. dollar. Yep. Actually, the U.S. dollar is worth 0.93 less than 1957 or something around that. Yeah, it's lost a lot of its value, a whole lot of its value. I feel like an effort to avoid offending people, Jebb compromises ignorance on some global socioeconomic happenings and speaking negatively about some seriously evil stuff. I'm not sure what you're talking about, but there's definitely some very evil things going on in the world right now. There always have been, there always will be until Christ comes again. And even for a couple of days thereafter. But, yeah, no, as far as what's going on in the world in Ukraine, there is absolute evil going on in Ukraine. There's also absolute evil going on in China and, frankly, many parts of the world. Not just there, although those are two of the biggest culprits. Adam Rourke in chat says, seeing a lot of coins moving. Yep, a lot of people are starting to realize that bottom's close or in. Crypto Jebb, good show today. As always, appreciate your work. God bless. But thank you so much, CBD Suddy. And shout out to you, my friend. Also, how's the family, sir? We'll get to that here in just a second. CBD Suddy said, love you, Jebb. Thank you. How does Russia lose this? Can anyone imagine Russia saying, yes, NATO can decide our government and the IMF can tell us how to spend our money and what to spend it on? Russia might not have a choice, is the thing. We're going to see what happens here in about 4 to 5 months after the ice melts and the mud hardens. There's going to be a slugfest in eastern Ukraine. And that's very sad because a lot of people are going to get hurt. And that's a horrible, horrible, horrible thing. Joe Rogan just had Peter Zion on. Really? Turns out Peter thinks Bitcoin is going to zero. He gave his points on several YouTube videos. Debate him. I would be very interested in talking to Peter Zion. All right. Let's see. All right. As far as the family side of things. So essentially, I know you guys have been wanting some updates. I'm going to try and keep this brief because we've been not really. Shout out to Shavdrak Frost, by the way. I have to run for a meeting. There you go. Thank you for tuning in. So things have been getting even more difficult over the weekend. I want to be careful how I talk about this, just for the sake of, being just maintaining privacy, I guess. But essentially, if you don't know, my wife has been having contractions. We're 25 weeks, 4 days pregnant, 25 weeks, 5 days pregnant, whichever. It's Thursday that it clicks over to the next week. And my wife's been having contractions pretty much every 10 minutes for about 6 days, since Tuesday of last week. Went to the hospital. Hospital turned us away, acted like it was nothing. We've been blown off by a lot of different doctors, and telling us it's Braxton Hicks. From all the research that we can do and from the testimony of other women that are in Sarah's family, you don't have Braxton Hicks every 10 minutes for 6 days straight and then be extremely painful like labor pains. And at the same time, there's been a few other developments and updates that I'm not going to go into specifics on, but that have made things even more difficult to tell whether or not the baby is about to come at any point at all. We really don't have any way of knowing. And so if our daughter was born right now, she would be about 14 weeks premature and need to be in the NICU, the neonatal intensive care unit, for at least 3 months because she'd be born at under 2 pounds. So we've been praying, and God's good. Baby's still in Sarah, growing, and that's where she needs to be. But right now there's 3 scenarios that we're trying to settle into, and we don't know which one's going to play out. Either one, she's going to be born extremely early, and she's going to be in the NICU for 3 months, and that's going to be very hard. Number 2, Sarah could just continue going through all of these contractions for the next 12 weeks, and we could be sitting on pins and needles for 3 months wondering, is our daughter about to come or not? We don't really know. Or 3, God could do a miracle, and he very much can. He absolutely can, and has before, and the labor pains and contractions and all of the different symptoms could go away tomorrow, and it could turn into a perfectly normal pregnancy. I have absolute faith and confidence that God could do that if that be his will. At the moment, that's not what's happened, though, so we're basically just leaning on God, not getting discouraged, and trusting in his perfect will, and, trusting that he has our best interest and our daughter's best interest at mind, but also that he has a plan that's much bigger than any of the 3 of us. So that's where we've had to, and we always have to, but especially in times like this, we have to really lean into our faith and trust in God that he's gonna provide for us, and so he has, and wonderfully, luckily enough, it's been a very hard 7 days, but it's been 7 days where our daughter's continued to grow, and every day she grows, the more likely it is that she will, be okay, both in the absolute sense and also in the health sense when she comes and is born, because obviously she will be born at some point. Sounds like Satan real scarring and doing what he can. Keep your eyes on Papa God. Yeah, absolutely. God's in control, and the enemy is absolutely trying to attack us at every single front. The word says, for we wrestle not against flesh and blood, but against principalities, against powers, against the rulers of the darkness of this world, against spiritual wickedness in high places. It says that in Ephesians chapter 6, verse 12. We're not wrestling against health. We're wrestling against a very real enemy that wants to destroy you and destroy us. The word says he comes to steal, kill, and destroy. And that's what he's trying to do. But, as Classic IT Guy said, we serve the God of miracles. Amen. Amen. Really appreciate you guys and your support. CBD Study said, this show and your fans will wait patiently if you need to go handle that. We are with you, Jebb. Yeah, I'm pretty much just doing the stream right now, and if I have any time, I'm doing other things. There is still a lot of work to do in the background. I'm trying to do some of that, but ultimately, of course, you guys know where my priorities are. They're where they need to be, and I appreciate you guys' support on that. Although, I did get a hat. And I'm over time, so I got to go. But I love this hat. We celebrate 3 Kings Day so that we can kind of, make Christmas last longer because we really like Christmas. And Sarah got me an awesome hat. I told her I want a hat like what Coyote Peterson has, if you guys have ever seen that. So I love this hat. Tell me what you think. Anyway, going to go ahead and wrap it out. Really do appreciate all of you tuning in. And do not forget to sign up for Lux Algo. You can find the link for that amazing software in the description box down below. If anybody has a link or some kind of contact with Peter Zion, I would love to have him on the channel. I would love to have a conversation with him. Jesus will use it to good testimony. Absolutely, Martine Siebels. Thank you very much for that. Appreciate all the prayers you guys can send us our way. We have a lot of people praying over Sarah right now. Of course, myself and Sarah included. Would love to, would really appreciate any prayer that you guys are willing to send our way. God is good. Anyway, guys, that's going to wrap it out for today's stream. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.